Where does it end?
Well, Stuart, we're in a recession right now. The consumer, you just go back 6 months ago and the picture was very, very different.
Yeah.
But now the savings rate is at the lowest level it's been post-financial crisis. Credit card debt is skyrocketing. We just printed the lowest consumer confidence number in history. It hit 50. You know where it was in February of 2020? It was at 101. So completely cut in half. Rents and mortgage rates are skyrocketing, and the small business optimum index is where it was in the middle of the lockdowns during COVID. So gas prices skyrocketing, and inflation everywhere. This has just crushed the consumer. We haven't quite seen a pickup in unemployment yet. I think that's the next thing you're going to see. Look, I think we're in a bear market or we're in a recession.
So how far down do we go? We've had people on this show saying we've still got another 10%, maybe even 20% down from here. What says Mike Lee?
You know, Stuart, that's obviously the million-dollar question. And the fact that all this is happening so fast and we've had such a dramatic sell-off in such a short period of time goes to show how unexpected this was. So what I would say is the good news about this recession and the consumer pulling back is this recession will kill inflation. And so once we start seeing this inflation slow down and the Fed predicts or the market predicts a Fed pivot, markets tend to turn far in advance of the economy. In 2009, in March, that's when the equity markets bottomed. Unemployment didn't bottom until April in 2010. So we'll turn ahead of it. We could have 5% more to go. We could have 25% more to go. It is hard to say right now because we do not know how high interest rates are going to go, and we do not know how much economic activity is going to collapse, but nothing is headed in the right direction right now. I think you can hide in some energy stocks. There's some certain fixed income instruments that are tied to higher interest rates that are relatively safe, where you can make some very decent yield right now. But otherwise, this is a difficult situation. If you're a long-term stock investor and you're dollar cost averaging in your 401k, just don't look. Just if you're 20, 30 years away from retirement or 10 years away, just keep plowing in because the investments you make today will be worth a lot more a decade from now. And if we do go down another 20%, that just means that money going in then will be worth even more 10 years from now.
All right. I just don't look at it when my 401k goes through the floor. I just don't look. All right. Mike Lee, thank you very much indeed. See you again real soon. Now,